Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. market update. Taking a look at the charts, you can see that bounce from the lows of December 24th have continued. In fact, we have a very classic, perfectly shaped V-shaped bottom. I'm not a big fan of V-shaped bottoms, and that's because historically they tend not to hold. Usually we get a test. Now what's interesting is the last week or two, it seemed like everybody on the financial networks were talking about the fact that we need to have a test of the lows. It was almost like everybody viewed that. And you know how the markets work. When everybody views things one way, things tend to go the other way. But what was interesting today is on the financial networks, even with a down day in the market, a lot of people were saying, no, we don't need to test the lows. So everybody's changed their tune, and that actually could actually open up the avenue for an actual test of the lows. I want to remind you that when we test lows, it can happen three ways. We've talked about this in the past, but just a quick refresher is that you can come down near the bottom and then bounce, come down right at the bottom, or you can even break the bottom, which is the one that creates panic, because it scares everybody that the lows didn't hold and really washes things out, and that tends to be a pretty good rally from there. So we don't necessarily have to get all the way down to the lows for it to be a successful test. And we have this larger five-wave pattern to the downside with the wave 4 only retracing 55%. As you know, we can go up to 61.8%, so we could still actually go higher. A couple interesting things here. I did think that we might have a little more problem here at the 2640 level, and maybe we are. We did break above it on Friday and then move back down in today's trade. The U.S. markets were closed yesterday as a holiday for Martin Luther King birthday celebration. So with that, we have moved back to the downside, but notice where we are. We're just right at the 2640 level again. So that's support and resistance, and we've just come down to that. So we could bounce off of it again. We'll be looking to see if there's a follow-through day tomorrow on Wednesday for a continued move back to the downside. That'll be very interesting and very telling to see what happens. Now, when we take the big Elliott wave pattern off and go back to our zigzag that we've been following for quite a while, we also have some interesting information. So remember that we had this quick zigzag pattern that moved down and had the 50% corrective move where we went right back to that 50% level, and then we had the extension down, and on the extension we broke the 161.8% level but headed back up. Now note, when we came back up, look at this, we went sideways for an entire week right here at that 61.8% level. It was 25.96, but it was the 61.8% fib level, which we had talked about, that if we got back to there, we would take off the short puts of our put debit spread, which is exactly what we did. And we added to the long puts. So we're following along with our plan, even though we continued a bit higher. But today's coming back down pretty much to that area where we made the adjustment. So if we take this off, you can see that, again, right at the 2640 level, it's going to be so important over the next few trading days to see how the market handles that. But at this point in time, I do expect a further downward move, some sort of a test of the lows, even if we don't make it all the way there. It would be very surprising to me if this very sharp V bottom held and we just continued to rally up, especially with all of this congestion that's right here that the market needs to get through in order to continue to the upside move. So we made our adjustment. We did exactly what we said we were going to do, following along with our plan. I'd like to look at the SPY so we can bring volume in, and you can see on this upward move, we didn't have a whole lot of volume. Not what we've had. Look at the volume that we had on the way down. But over here on the volume on the upward move, it's been much less. So much stronger volume on the way down, much less here. Also lends to the fact that maybe we're not quite done with the downside yet. And today's move actually had a pretty decent amount of volume as well, above average volume on the move to the upside on Friday, but also above average volume on our move back down in today's trade. So tops and bottoms quite often have a lot of volume to them. So we'll see if that is the move back down or if we need to go up to that 61.8% fib level first. We're kind of a little bit into no man's land in between there at this point. Looking at the VIX, pardon me, on the VIX we moved down to the 78 or 76% level, so that means that LA wave pattern is disqualified, and we're right back here into this area of major support resistance, and we could actually also draw that line, which we've been looking at down here in the 15 to 16 range. Breaking below this area here around 25 was key, but holding this 15 to 16 area is even more important, and it looks like, at least for today, we held that. You can see we had a big move back up in the VIX. We'll see if that continues again. Tomorrow is going to be a very important day trading-wise from a technical standpoint to see if we get these follow-throughs that are necessary for the direction to continue. I did want to show you just a quick chart of TBT. We did bounce off of the lows from interest rates, so we had a little bit of a bounce, and then on today's trade we moved back down a little bit, but you would expect that money moving back into the bond market with the equity market struggling and having a lower tape. So very important there. Looking at the dollar, we showed you this area of support resistance here, and you can see that we had a wave 4 again, 73%, so that violates that 61.8% level, so it nullifies the count, and we just look at the fact that we kind of held this area. We were talking about, boy, if we were to break that and the dollar were to really begin to weaken, how interesting that would be in global markets. But so far we're moving back to the upside. But then you have the bit of a dichotomy where no country, it seems now, wants their currency to move higher because everybody's gone into debt with quantitative easing, etc. And the higher interest rates go, the more it costs the country to service that debt. So nobody wants higher interest rates. Nobody wants a stronger currency. Everybody wants their currency to be weak so it doesn't cost so much so they can keep borrowing. It's crazy. It just feeds on itself. It's really amazing what's happened over the last 10 years or so as far as the difference in how countries view their currency. It used to be you wanted a strong currency, but not anymore. I did want to show you that on the Texas Roadhouse strangle that we had, as you know, we had this big descending triangle. We tried to break it. We came back up, tested it. That's what we were talking about last time. And then we've had this big explosion to the upside. So this one finally moved. So we've got a nice gain out of this strangle here with the break to the upside. So very important there on that break to the upside that occurred. So we can close that one out as another profitable position. Now last week we looked at GLD and we had just a little bit of a move down on Friday. Not much happened in today's trade, but going back to the big triangle on the monthly chart that we talked about. Remember now, we went way out in time on this one using a monthly chart. Obviously, we needed to have some time to move, so we've got a few months for this one to make its break out and move. But boy, still just a very good triangle. And we have this support resistance line here right at the 100 level. We tested it here on this move down and also touched the trend line coming off of these lows back here in 2008. So it looks like gold over the next several months, maybe even over the next year or two, wants to make a very significant move. And if it breaks, we'll just ride along with it, whichever direction it goes. Because with the mouth of the wedge that big, it's going to be a significant move. That's fascinating to me because that could be so telling economically as far as what's going on. A new case study to look at this week, TAL, considering what we've had going on with the market with the downward move into December. There's not a whole lot of patterns, especially with wave threes to the upside that we like for our out-of-the-money butterflies. But we did see this one, and it had a big update today, considering a downward tape, or a weak tape as people call it, but a big move to the upside with a target price around 34.5, so about a $3.5 more move, about a 10% more move out of this. That's what we like to see when we're looking at positions, is we like to see at least a 10% move out of the underlying equity to make any sort of a trade, even an options trade where we have more leverage, worthwhile as far as the risk versus reward. So with this pattern here, we can look at the DMI and note that we have an ADX that's extremely strong. So a very strong ADX between these two directional indicators. It's moving to the upside, even though it's fighting the not so great market that we've had over the past few months. It's set up into a very nice pattern, and you can see it didn't get very weak with the big downward move that we had, at least coming off of those lows back from October. So we've had a nice move to the upside, and again, moving to the upside on the day when the market was down big is very impressive, a very impressive show of strength, and that is exemplified by the DMI supporting this Elliott wave pattern to the upside. So we really like those wave threes when they're moving up, and we can set our out-of-the-money butterfly again, taking very low risk. See how this one plays out, see how the market moves from here. But again, tomorrow's a big day. Do we get a follow-through on that move back down, breaking below the 2640 level today? Just barely, but breaking below it. Another follow-through day would certainly add far more credence to a continued move lower. Hope you had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.